હેલો ફ્રેન્ડ્સ, જય સ્વામિનારાયણ. સંદીપ પંડ્યા કોમર્સ ક્લાસમાંથી હું છું આનંદ સોની. In last video, we have discussed very important topic of cash flow statement where we have discussed the investing activity. Today, next and important topic that is financing activity. As I had explained in earlier video, we know the balance sheet has mainly 5 components. So let me show you again. If you have missed the earlier video, this is our balance sheet where on liability side we shall show shareholders fund, non-current liability, current liability, and on asset side we usually write non-current assets and current assets. So as I told you earlier, non-current assets is a part of investing activity. These current liabilities and current assets both are part of operating activity, where I had shown you very important exception, that is except bank overdraft. This bank overdraft, including non-current liability and shareholder fund, is a part of financing activity. That means share capital, any long-term borrowing or any short-term borrowing like a bank overdraft are a part of financing activity. So sir, how we should solve this one? So let me show you the practical solution to the questions. As you can read from the following information, calculate cash flow from the financing activity. See, let first of all bifurcate. Whenever we have been given a questions or mix of informations, we need to bifurcate the informations whether it is related to the investing activity or a financing activity. As we know, land is assets for us. This is the part of investing activity, hence we shall not include in financing activity. Equity share capital, as we know, this is the part of shareholders funds, hence we shall include. Redemption of preference share, that is also a part of financing activity. Redemption of debenture, that is long-term borrowing, is also a part of non-current liability and financing activity, hence we shall also include. Borrowed bank loan, that is also financing activity. Debenture interest paid, so debenture as a loan we have borrowed from the debenture holders where we are supposed to pay the interest, that is also our financial activity. Dividend paid, we usually make a payment of dividend on equity share or preference share, hence it is also a financing activity. Dividend interest received, see, on which we shall receive the dividend or interest wherever we have made the investment. So this is the part of investing activity. So what usually students commit the mistake, they write dividend paid as a financing activity cash outflow and then they add dividend received as a part of financing activity, so which is totally incorrect. So keep in your mind, dividend paid is a financing activity, but the dividend received, this is the part of investing activity. Now sale of furniture, as I told you, this is also a part of, as I told you, land is assets, furniture is the same way assets, hence it is a part of investing activity, we shall cancel it. Purchase of machine, that is also assets, hence we shall also cancel it. Interest received on investment, that is also investing activity, and paid for patent, that is also investing activity, hence we shall cancel it. So usually whenever we have given the mix of information in exams, so do not forget to first of all cancel out, eliminate the information which is related to the investing activity and only try to find out the activities which is related to the financing. Fine. So let me show you the statement how we shall write. So first of all we make the total cash flow from financing activities. So one by one I will show you. First of all, equity share issued. That means whenever we issue the share to the equity shareholders or to the investor, we received cash from that investors. So cash comes in, that is our inflow. So we shall write issue of equity shares, that is rupees 1,40,000. That is positive flow, that is cash comes in. We know redemption of preference share. Redemption means we are returning, we are making a payment to the preference shareholder. So this is the redemption where cash goes out, hence we shall write redemption of preference share where cash goes out, that is rupees 60,000, hence we shall write negative flow, that is cash goes out, cash outflow. Now next is a redemption of debenture. The same way, redemption means we are returning or refunding the money to the debenture holder, that is cash goes out, hence we shall write redemption of debenture, that is again cash outflow, where we shall write 70,000, that is cash outflow. Next one is a borrowed bank loan. So whenever we borrow the loan from the bank give cash to us, that is cash inflow. So we shall write borrowed bank loan, or you may write bank loan borrowed, that is rupees 90,000, that is positive, that is cash comes in. And finally, that is debenture interest paid, that is also whenever we have make a payment, so it is a cash outflow. So we shall write debenture interest paid, that is rupees 6,000, that is also cash outflow. Next one is dividend paid, that is also our cash outflow. So dividend paid, which is rupees 8,000. And as we know, none of the other information which is related to financing activity. So by making a final total of these items, by adding and subtracting whatever value we received, that will be your, if it is a positive answer, keep in your mind it is a cash flow from financing activity. If it is a negative answer, that is called cash used in investing activity. So finally we shall write cash flow from or used in financing activity. Fine, dear friends. So let me show you the next calculation for this type of activity. Read this question. From the following information, calculate cash flow from financing activity, where we have been given opening value and closing value. You can read 10% debenture, opening value was 1,95,000, where we have been given closing value 2,45,000. So as we know, debenture is a part of non-current liability, and as I told you in earlier, non-current liability is also part of financing activity. So let me show you one by one. Equity share capital 2,50,000 and closing value is 3,45,000. 12% debenture, that is 1,50,000 and 1 lakh. So preference share capital 1,80,000. Bank overdraft we have been given 68,000 and 45,000. One by one, where we have been given the additional information, debenture interest paid 22,000 for equity share dividend and preference share dividend, and paid bank overdraft rupees 4,000. So let me show you the calculation, how we shall write. First of all, as we know, we shall first of all write the title, that is cash flow from see, 10% debenture was of rupees 1,95,000, which become at the end 2,45,000. So as I told you, during the year, we have received additional amount from the debenture holder. So how much additional amount we have received? So what student write, either they write 1,95,000 or 2,45,000. So this is not a case. Whenever we have started our year on 1st April 2016, we have already balance of rupees 1,95,000 in debenture account. But during the year, we have received some additional amount. That is, so how we shall find the additional amount? As we know, 2,45,000 minus 1,95,000. That is 50,000 additional cash we have received from debenture. So what we shall call here? Issue of debenture, that is rupees 50,000. And as I told you, this is positive flow. That means cash comes in. Equity share capital, as you see, which was 2,50,000 and it become 3,45,000. So same way, we have issued additional shares where we are receiving the cash. So we shall write issue of equity shares. So as I can see, the difference is very common, that is 95,000. Next is 12% debenture. What was the amount of debenture in the opening? 1,50,000. Now it become 1 lakh. So see, whenever we have been given a two type of debenture, so do not forget to write 10% debenture, and where we have been given a 12% debenture, which was of rupees 1,50,000, and it become the value 1 lakh. So what does it indicate? We have made the payment to the debenture holder during the year. That means cash goes out. So we shall write redemption of debenture, that is 1,50,000 minus 1 lakh, which will be rupees 50,000. Now preference share capital, which was of rupees 1 lakh, become 80,000. So same way during the year we have redeemed the amount, which is 20,000. So we shall write also redemption of preference share, which is 20,000. That means cash goes out from our company. Bank overdraft in the beginning of the year, which was 68,000, now it become 45,000. So we know 68,000 minus 40, that is 23,000. So during the year we have made the payment for bank overdraft. So that is also a bank overdraft paid. So we shall write payment for bank overdraft, that is negative flow where cash goes out. Next additional information we have given, debenture interest paid. See, they've used the word paid, means we know cash goes out, that is cash outflow. So we shall write debenture that is 12,000. Now paid 22,000 for equity share dividend and preference share dividend, that is also cash goes out. So we shall write dividend paid for equity share plus preference share, which is rupees 22,000. So which is also cash outflow. Last information is given, paid bank overdraft 4,000. See friends, actually this information is incomplete in books, where paid bank overdraft interest is given. So do not forget, this is interest paid. So as we know, interest paid is bank or interest paid on bank overdraft, that is cash outflow. So we shall write interest paid on bank overdraft, that is rupees 4,000. So this is also cash goes out, we know. And finally we shall make the total, subtracting from the positive value whatever value we received. As I told you, this will be either the positive answer or negative answer. If it is a positive answer, that is cash comes in, that is cash flow from financing activity. And if it is a negative answer, so keep in your mind, this is cash used in financing activity. Fine. So this video will help you a lot to understand the detailed concept of financing activity. See you in the next video. Have a nice day.